All right, welcome to this episode of Market Shares. I'm your host, Tony Blodgett, and today we're going to have a fun conversation with my friend, coworker, and just great mortgage advisor, Doug DeBruin. Doug,
hello.
Welcome to the show.
Hey, thanks for having me, Tony.
We were just talking before the show. We've got at least a decade working together.
Yeah, I'd say so.
Probably a little bit more than that, but a good decade. And you guys have probably come to realize we have a lot of folks that we've all worked together for a long time. You know, we kind of find a groove, and this is a difficult business, and shuffling around is not always the easiest thing to do. So, you know, when you find something that works, you stay in your lane and you just put your head down and work, right? So. Right. It's been great working with Doug for so many years. You've always been a little bit farther down south, so I don't see you as often. We don't work in the same branch, but it's always great to jump on the phone and connect with Doug. And he's got an interesting story, and so I'm looking forward to getting into it. But Doug, I'm just going to start off like I do so many of these interviews, and let's just talk about kind of how you got in the mortgage business. And none of us, I don't think, planned on this. I mean, I kind of planned on it, but most people didn't. So give us a little bit of backstory on that.
Yeah, so mine is a atypical story, I'd say. So as you know, I'm also a pilot for a major U.S. airline. Well, back in 2000, I worked for a different U.S. airline, and my career was set, my future was set, I thought, and then 9/11 happened. And in 2002, I got laid off from being a pilot. There was no pilot jobs to be had.
So before 2002, you were full-time commercial pilot.
Oh, yeah. I never thought about a mortgage.
All right.
Never thought about anything other than just flying and working, and, you know, future was set. I'm sure a lot of people felt the same way before 9/11. I did a whole bunch of odd jobs. I framed houses. I drove a school bus part-time, which was not a great job.
It's kind of like flying a plane, right?
Yeah, that's what I thought. No, it was awful, at least for me. Yeah, and just finally, after about a year and a half, the market started to recover a little bit, and I got a job flying a plane for an old boss of mine. And during that time, interest rates were really good. This had been around 2003, 2004. So the guy that did my refinance on my house used to work for AT&T. He got laid off too back in 9/11. His daughter was a processor, and he's like, yeah, I kind of fell into doing loans. It's the same thing. I'm just selling stuff. He goes, you should do loans on the side too. He goes, you don't need a license. Like back then, you didn't need anything.
Right.
You can just go do loans on the side, make some extra money. And at the time, I was reading the Robert Kiyosaki books, Rich Dad, Poor Dad. Yeah. And his whole thing was like, if you master one more skill, you'll never starve, or you'll never go hungry. You'll never go for work. So I was like, oh, I'm going to give it a try. So I went to the Bellevue School of Mortgage Lending, and I took 2 classes, and I'm like, all right, I'm ready to go. And I just answered an ad and got a job at this place called Charter Funding, which you may remember, down in Bellevue. And I'm not the guy for that place. They were totally established. They were like, you should have a book of business if you're going to work at this place. I had zero. And they were totally, it was like the old, here's your phone, here's your desk, go make some calls and get some loans.
Yep.
Here you go. Welcome to the mortgage business.
That's how I got started. It sounds about right.
So I just hemmed and hawed and did onesie twosies, and then started finding a groove. And as you know, it was all turmoil. It was totally subprime back then.
Yeah.
Like, it was really subprime. And I always liked the numbers, and I always liked helping families, and I always thought, you know, you want to grow your wealth and like build for the future, and the subprime loan, it was not it.
Yeah.
So like when other guys were doing subprimes, I was still doing FHA loans because I felt like that was equal, if not better, product.
Yeah. Now I know why we're kindred spirits, because I was the same way during that time.
Yeah. So one thing led to another, and you know, we started working together when, like in MAG, I think MAG days back in 2010, and this is probably New American Funding is probably my 7th or 8th company, but I've been here the longest for sure. You know, it's like you were saying, once you find your tribe, and you find a great company, great support, great product, and can-do attitude, and great managers, then I think you're foolish to go anywhere else.
Yeah. No, well, I appreciate that. It means a lot. And that is, you know, stability has always been something we've tried to build, which is not the easiest thing to do in the mortgage industry. But, okay, so now you're still flying like full-time today, right? But it hasn't always been that way.
No.
So tell me a little bit about that. What's the journey been back from being full-time in mortgage to being a pilot? Because I know for a while you were flying smaller planes, like you work for some other, large companies, but flying like G5s, G7s, or something like that, right?
Yeah, I work for smaller companies and charter companies. And then I just kind of manage the balance. We have a great assistant team here at NAV, and other than sometimes not being able to make a call right away, it hasn't impacted pretty much any of my business, because I can still get on the phone, I can get on the internet or email or text, as the case may be, while I'm on the ground. I have assistants and managers can step in when I'm out of the office, for lack of a better word, but we're hardly ever in our offices these days.
Yeah, no, I know. It's definitely changed. All right, well, this is a mortgage and real estate podcast, but I got to ask you some pilot stuff. Okay? This will be fun, because I've asked you some of these questions before. And, I don't know about you guys, but I travel these days quite a bit. I'm on a lot of airplanes. And for the first thing I want to just pick your brain about is just turbulence in general. People get really freaked out. I am used to it more now, but I've always been a little freaked out. Okay. How worried should a passenger be about turbulence on an airplane?
99% of the time, you shouldn't be worried.
Don't be worried.
No.
Like when should I worry?
You should worry if somehow you end up flying through a thunderstorm, let's say, which pilots will never do.
I was in one of those once.
Shouldn't do. Or if, you really shouldn't be too worried, because, what feels like really bad turbulence to you is just like...
Not that big a deal.
It's not a walk in the park, but it's pretty benign to us.
Yeah.
Like, we're not concerned.
The planes can handle a lot more than...
Yeah, there's designed speeds to fly at turbulence, so that's what we do. We fly a certain speed or a certain Mach number in turbulence, and at that speed or Mach number, you can weather pretty strong turbulence.
Yeah. I remember asking you, I used to go to Palm Springs quite a bit, and it's a pretty...
Oh, you should be worried going to Palm Springs.
Yeah.
No, I'm totally kidding. Palm Springs can get bumpy because you're going down,
Yeah, well, when I asked you about it, you're like, oh, I love landing there. It's like you
Yeah.
come over the mountain, and it's
gorgeous.
It's a fun ride down.
I love it. It's gorgeous.
Well, I do think that there's a lot of people have a lot of anxiety about flying, and one of the things that we talked about, I think a great analogy between flying and the mortgage business is communication. Like, I think that one thing, that one time I flew through lightning, it was a flight into Birmingham, Alabama. I was going there to do the School of Mortgage Banking so I could finish my CMB. And we had had a layover in Denver, and then we flew a pretty small plane, but it was still a jet, over to Birmingham, Alabama. And apparently there had been no flights in or out all day because there was pretty bad weather. So this was like the first... like we're gonna try it out and see if it's safe.
You're a pathfinder.
A pathfinder, is that what it is? Okay,
That's what they call it.
Okay, well, I did not enjoy being a pathfinder. However, the one thing that was nice is that I knew it was coming. The pilot is, before we even took off, he said, "Look, it's been pretty rough weather today. It's a short flight into Birmingham. However, the closer we get, the worse it's going to get." But, it's going to be okay, and we'll communicate. And just knowing kind of what to expect, once it hit, and they said, hey, we're going to not do any beverage service. We're going to have the flight crew sit down early, so on and so forth. And so as that was happening, it didn't seem out of sorts. And it was still a pretty rough ride. I think he had made one place he probably could have done better is he said, we'll be on the ground in about 15 minutes. And it felt like about 45 minutes later of just massive jarring that we finally got to where I could see the ground. And I'm like, a few more updates would have been nice. Yeah. But it's funny because we had this conversation a few weeks ago, and we talked about the same thing with the mortgage process and how borrowers, especially first-time home borrowers, they have the same types of anxiety that you get, quite frankly, when you're flying on an airplane, and you're nervous about what's going to happen. And so I think that, being able to give people the same sort of, hey, here's what to expect, here's the status updates, makes a big difference. I know you do that in your business as well.
Yeah, that's actually a great analogy between flying and doing a mortgage, because at least from my point of view, they both involve checklists.
Yep.
They both involve communication. Like we take special classes in flying on communication, on what they call CRM, or it could be called RRM, or CRM. And it's just basically resource management. Like you got inside resources, you got outside resources, and you have to manage that. And you want to have really clear communication as to who is doing what. And it's the same thing in the mortgage. Like I take that to the mortgage. Like you want to have clear communication on what the next steps are, like you were saying, what to expect, letting them know like, hey, I do this all the time. Like I fly all the time. It might be bumpy. It might feel bad to you, but it's not that big a deal. Like
right.
We're going to, like I'm telling you now, before we even start the process, we're going to have bumps. We're going to hit bumps along the way. But, you know, I'm going to use my experience and everyone else's experience to help minimize the bumps. And when they do come up, we're going to solve them and take care of the problem. So,
yeah, I think it's a good reminder. One of the things that we used to use, shared with me years ago, and a coaching program that I was in is a turbulence letter. I think a lot of people have heard of this term, but letting your borrower know up front, like, hey, there's about, 100 things that could go wrong during the loan process, and just know that, hopefully none of them go wrong, but I'm aware of all of the things that could go wrong, and I'm ready to deal with them as those circumstances arise. So it's a great analogy. Well, how cool to be able to have kind of a dual career path over these years, because I've never noticed, your absence, or, you've always done great mortgage business, and it's never felt like, oh, gee, Doug must be out flying or something. I never really even noticed. So you've done a great job of creating that balance.
Try to, yeah. I've focused on that a lot, especially with like these days, like implementation and using your time really efficiently as you possibly can. And then like, with referral partners going, I'd rather go a mile deep and an inch wide instead of going a mile wide and an inch deep. Like I only have probably 10 to 12 referral partners between real estate agents, financial planners, but that works for me because I have a good book of past clients, a good book of past business, and I stay in contact with them.
Yeah.
Through all the tools that we use here.
Yeah.
And just having a good relationship with them. I think that's really important to let them know what's going on.
Well, that was one of my questions for you, is about your referral partners. So it sounds like you've kind of been able to establish, 10, 12 referral partners. Are these like long-term relationships, people you've been working with for a long time?
Yeah, like 2 or 3 of my agents are pretty long-term, and the rest are, I guess, medium-term. One of my financial planners is long-term, and the other one's probably medium-term.
And so are you still out prospecting for new referral partners? And if you do, how do you do that?
Yeah, I am. So starting this year, I'm going to try and just kind of keep prospecting and calling referral partners that I run into on transactions. I want to be more intentional about that, about connecting even on the selling side.
Like with the listing agent.
Yeah, with a listing agent. And maybe trying to go a little deeper with my clients into their potential referral partners that we could work together. Like if they have a financial planner they work with. I'm big on numbers. I'm really big on wealth creation. So like any kind of financial planner I love working with. I use Mortgage Coach. I've used Mortgage Coach probably 10 or 12 years. I'm black belt level or whatever that is. But like it gets me excited running a Mortgage Coach analysis for somebody and showing what's going to happen in 10 years. And the financial planners like it too, because they can illustrate, here, stick this money into this account over time. Here's what you're going to have.
Yep.
It's a discipline.
Yeah, I've always appreciated, I'm a huge Mortgage Coach fan. And so a lot of the conversations we've had, and I know that you're prolific user of Mortgage Coach, use it on every transaction. And you're a student of the market. I love the conversations we've had over the years. A lot of times, you'll pick my brain, or we'll jump on a call about something else, and it's like, hey, let's talk a little bit about the market and what's going on. But I think you're right. There's so much as a mortgage professional that we have access to in our client's life, that if we just kind of slow down a little bit and learn more about what else is going on for them besides the purchase of this home, then there's so many opportunities to, give advice. Obviously, we're not financial planners, but we can have a wide network, and I think that that's a good idea. Reaching out to listing agents more intentionally, and estate planning. That's an area where people, long-term disability, estate planning, things of that nature. I find it's an area where a lot of people have never put the time and attention into, and they really should, especially as you start getting a little bit older. It's important to know, hey, if something happens, is my family going to be taken care of? Is the home that I'm purchasing going to be taken care of? Can my spouse afford the home in my absence if that were to happen? I mean, all those things should be considered, and you can be kind of that hub that refers those folks out. And when you bring that kind of value to a relationship, it changes the conversation from, hey, what's your rate today, to, man, this person really cares about helping me create wealth and protect my family's future. So.
Yep.
Yeah, I love that about your approach to the business. So let me ask you this. So you've been doing this now for, how long total? Like, when did you get in the business?
2004.
2004.
February. It's almost anniversary time.
Almost 20 years.
Almost.
I got you beat by a couple of years.
Nice.
But so what are some lessons that you've learned, or maybe a lesson that you learned that you wish you would have known early on in your career?
The biggest lesson is to own the problem, and when there is a problem, get everybody involved as soon as you can. Don't ignore it.
Yeah.
I think that's a mistake a lot of junior originators make. Like, they just want the problem to go away.
Just bury their head in the sand.
They'll just bury their head in the sand, or they'll just not communicate. And it goes back to communication, which is key. So that's number one. Number two is you get out of it what you put into it. If you go hard, and whether it be prospecting, whether it be learning products, whether it be learning mortgage coach or something like that, if you go hard for a while, then that's going to make you a better originator overall. And you just got to stick with it. You got to have perseverance. If you don't have that, then you're not going to make it. You got to have patience for that kind of stuff. Because every new referral partner, that's a 90-day burn, easy, before you're going to see something out of that.
Right. You got to invest the time to build the relationship.
You're not going to get instant results.
No, that's great advice. Nothing burns me more than a loan officer who doesn't proactively address challenges that are happening in a file, So I'm glad you pointed out that one first. Like, if you're newer to this industry, or you're new to working purchase business, there's so many people involved in the process that the worst thing you can do is not bring up a problem. Matter of fact, I would argue that, even bringing up potential problems can be a good thing to do, because if something looks like it might be a problem, there's two reasons you might want to bring it up. One, because if it does become a problem and you didn't say anything, everyone's like, why didn't you say that as soon as you knew about it?
Right.
And two, if it doesn't become a big problem, at least the people you're working with know that you're bringing value to the transaction. Because, look, there was this potential problem. We avoided it. I was prepared to deal with it. Luckily, we didn't have to. And sometimes people wonder, like, what do you even do? And in acknowledging the challenges that you're working on behind the scenes, it does create some value. And I think that's important for people to realize that, having a good mortgage advisor on my side is important, because even though in this case it didn't go sideways, I know that if it would have, I got the right person on the job.
Yeah. And I will also say that it's a very small world, this real estate world.
Yeah.
And you make a mistake and put your head in the sand and don't talk to your agents about that, or clients, or title company, or whoever, then that's going to follow you, because people love saying how bad somebody was to someone else, so it could hurt your chances for further growth and whatnot. And you don't have to tell the client if you've solved the problem. Like we were saying, get everyone involved, get the client. They don't know any better, but it's that behind the scenes, it's that backstage stuff that a lot of people going into buying or selling or refinancing, they don't know. They just want to know, hey, what's your rate? Okay, great, I got you locked in. Well, yeah, you're talking to some kid in wherever,
right?
Who probably is going to bury his head in the sand because he's moving on. He's an order taker. He's moving on to the next guy or gal. You want someone that's going to stick with it. Yeah, you may be an eighth higher in rate, but you're going to get the loan closed because all these problems are coming up, and it's like, oh, I've seen that before. Oh, I've talked to my senior underwriter, and here's a way around that. And that's what I really like about NAF. Here's a way around that, or here's how you can solve that problem. We're a proactive company to solve problems.
Yeah.
And that probably comes from the top down.
Yeah.
I think.
Well, we're here to do home loans. And so we want to give a home loan to anyone who can qualify, and it's not always straightforward. I mean, today more than ever, just with the way that people's income has been disrupted over the last couple of years, the way that people are making money today is different, right?
Yeah.
There's people that are, I mean, influencers on social media. Like, how do you calculate that income? You know what I mean? And people are doing side jobs. They're doing Etsy. They're doing other things like that. We have a lot of people like you who have dual incomes. You know, these are difficult challenges to navigate. You think they're very straightforward, and it turns out that they're not. So yeah, having a professional that knows those things, you know, an eighth in rate on the home that you lose, like that can be devastating for a family, you know? Yeah. And so it can't always be about that. But no, you're absolutely right. Let me ask you before I get to the last question. You mentioned Mortgage Coach. I want to bring it up again. You've decided that I'm going to use Mortgage Coach on every transaction. What do you think is the difference to your client, and how do you think that has helped you with, you know, referrals and just the trust in the process? Can you just give a little bit of 2 cents on that?
2 cents on that. Well, first of all, they love the presentation and how you can integrate video into that, and then they can watch it at their leisure.
Right.
Let's face it, everyone's schedule doesn't align these days, so they can watch it whenever they want. Then
do you do a video on everyone?
I do.
Yeah.
Yeah. Why would you do it if you don't do a video?
I'm with you. I hear you.
Yeah. And then the referral partners like it too. The agents love it. I've had several like, what is this? What is this thing?
Yeah.
It's great.
Yeah.
I love how you can see different scenarios set out. You can see, you know, in our current market, you know, you can see list price, you can see a permanent buy down, you can see maybe a 2-1 buy down, and you can see a price reduction needed to match that. And, you know, it's really easy to show. Or I can say, like I just had a transaction where I was like, hey, we're going to get $6,000 from the seller. Should we use that for a price reduction or for reduction in closing costs? And the answer is just on every file with every client. Well, it depends.
Right.
Right? Does your client have cash? Does your client not have cash? What's more important to your client? So those are the questions you can ask, and you can put that on the video, and you can show all the scenarios. I showed a $6,000 price reduction. I showed a $6,000 credit, both to the agent and to the client, so they could talk about it. They ended up going with the $6,000 in credit for closing costs, because that was most important to her right now. So it depends, but I'd say that is number one. And then from that, you can get referrals to other clients. Like, hey, you want to talk to Doug? If you got this scenario here, or I'll get a call out of the blue from a past client. It's like, hey, I'm thinking of doing this or that. You know, should I get a home equity line of credit, or should I look at refinancing right now? I know I got a great rate, but which one makes the most sense?
Right.
So let's run the numbers and see which one makes the most sense. Because at the end of the day, I just want to serve my clients and help them have the best chance for wealth creation over time.
Yeah, I mean, I think that the options regarding mortgage finance are complicated, and so what Mortgage Coach does is makes it a lot more straightforward and easy to digest. Well, I love that you use that tool. I think every loan officer should. Maybe there's another way of presenting options. I'm not like, hey, only Mortgage Coach, but I'm a huge fan. And I used it in my origination career, and I'll tell you, it makes a huge difference. So last kind of question as we bring this conversation to an end, I want to talk about the current market.
Okay.
It's pretty awesome, isn't it?
It's challenging.
It's challenging.
Yes. There's a lot of opportunity.
Yeah. So that's kind of the question I want to ask you is, what do you think are the biggest challenges in today's market, and what do you think is the biggest opportunity?
I think the biggest challenges right now, or for prospective home buyers, let's say, is just uncertainty over the economy on a case-by-case basis, probably, and that ties in with employment. And I think we are heading for a recession if we're not already in one.
Yeah.
So, there could be job losses, so people could be weighing that. But I think if you're in a job that's maybe not going to have a job loss, or you feel like your job is secure, then I feel like there's tremendous opportunity, because it is a buyer's market right now. The buyer tends to have more power. They can ask for things from the seller. The price escalations that we saw last spring, not happening around here, at least in the greater Seattle area, unless it's the house like that everybody wants or something. But that's 1 in 10,000. So definitely the power is with the buyer, and they can negotiate a lower purchase price, or they can negotiate something from the seller to help with rate or closing costs, anything like that. I think the double-digit increase in property values we've seen over the last couple of years are done for right now. I think we're, at least in our neck of the woods, probably single digits this year.
Yeah.
And I'd say potentially double digits next year, like 2024. I think the way the economy's working, the way the inflation numbers are going to come out, you're going to see inflation continue to drop. You're going to see rates continue to drop in response to that. So I think you're going to see rates probably in the 5s. Maybe upper 4s, mid 5s.
That'd be nice. That'd be
somewhere
nice.
in that neighborhood.
Yeah.
Probably after June, I'd say. Somewhere in that neighborhood. Because that's the arch enemy of interest rates, is inflation.
Yep. If
If inflation fears are down, interest rates will drop. Right
Do you
now,
think it'll get to the 2% target rate?
I don't think so.
I don't think so either.
I don't think 2s are in the cards for a 30-year fixed. I think.
No, I mean inflation down at 2%.
No, I think we're going to see inflation down into the low 5s, middle of this year, 2023.
Yeah.
Somewhere in the low
I think it'll
5s.
be more persistent than people think, and it's going to keep rates a little bit elevated, but definitely lower than they are right now. You know, it's interesting when we look at real estate values, because I think that 2022 still saw appreciation, even though it's down a little bit towards the end of the year. But what's interesting, it's so hard to analyze the data because, like, for instance, if you look at like the average sales price in a particular market, that just means that, it could mean that the higher priced homes aren't selling as much, and that's bringing down the average. It doesn't necessarily mean that every home on the market has lost value. And so, and then same thing if you look at the median price. It's like the same sorts of, market dynamics come into play. So just looking at average or median, depending on what you're looking at and if it's for the state, if it's for the county, if it's for the country, oh my gosh. Even for me in this industry who kind of fancies myself as a bit of a numbers guy, I'm like, this stuff makes my head hurt to try to figure out. But I think that your typical average home that, a first-time home buyer or maybe a first-time move-up buyer is going to be purchasing, I think we see good price stability. We might see, as I've mentioned, a bit of a decline, but in the long run, if you're going to be in this home, live in this home, I think it's a great time to buy for the reasons that you mentioned, is that you're a little bit more in the driver's seat to be able to negotiate with the seller. And I hate to say it, but inventory doesn't get a lot better this year. I just don't think inventory gets significantly better. The one thing, I was watching a interview the other day, and we do know the one thing that could play into inventory, and we wouldn't see this here in our market. We're up in the Seattle area. I don't think it's much of an issue here, but there are parts of the country where we saw a lot of institutional purchasing over the last few years, like the BlackRocks and the big hedge funds buying up lots of property. So I think that if the market dynamics present a situation where these hedge funds would do better by liquidating some of their holdings and investing in other areas like fixed income assets or things of that nature, I think it could, it could change the dynamics a little bit, and that could cause some pockets to see more drop in values, or at least more inventory available, which would change the dynamics of the market a little bit. But I don't think that plays out in every market. But it is something that'll be interesting. But I remember back when back after 2008, after the meltdown, there was all this talk of shadow inventory. Do you remember this? When it's like all the banks owned all these properties, and everyone's like, well, they're going to release all these properties, and this shadow inventory is going to drop back. It never happened.
No.
And I think that's kind of this topic around these institutional these hedge funds. They didn't buy these homes to sell them in 2 years. Like, these are long-term, buy, hold, rent, strategy. And so I think it's a little bit of something that the doomsdayers like to talk about, but I thought I'd bring it up because I just watched a video about it the other day. So
Yeah, and the media doesn't do you any favors. I mean, they're after eyeballs, so that's all they're after is eyeballs and to get you to look at. But they're not actually in the trenches, right? Like us and our referral partners. So if you want the right answer, you want to talk to a real estate agent, or you want to talk to
especially someone local,
person like this.
Yeah, someone that knows your local market.
Real estate is so local, and definitely inventory here is still low. Household formation is still up.
Yep.
That was part of 2008. Household formation was down. Inventory was up.
Yeah. The exact opposite.
Yeah. Exact opposite.
Exact opposite. It's so interesting how different today's market is than 2008, and yet people love to draw parallels to it, and it's almost hilarious.
Yeah, everyone's got equity these days. All the 30-year paper is great.
Yeah.
Compared to your option arms or your interest only or your whatever.
They're not talking about toxic
228.
Yeah.
Oh God.
They're not talking about the front page of the Newsweek is not talking about mortgage toxic products. But well, awesome. Well, Doug, I appreciate you taking the time to come in to the studio. I love having conversations with people like Doug. I mean, maybe you're an originator who has another career. I mean, Doug's the perfect example where you can have 2 thriving careers and make it work in this industry. I love the flexibility of that. Even if you don't dedicate all your time to doing mortgages, doing it the right way, forming those deep relationships like Doug has done with his referral partners, using Mortgage Coach, putting your clients, and their families' needs first. Yeah. You don't have to be transactional, even if you're not doing this all the time. So, Doug, I love your business. I love the fact that we've had the opportunity to work together for so many years. Yeah. I'm looking forward to many more. And for those of you watching, I hope you got some value out of this conversation. If you did, share this with your friends in the industry. Like and subscribe, of course, because you never want to miss an episode that comes out every Friday.
That's right.
Every Friday, a Market Shares drops. You're a subscriber, right?
Oh, yeah.
Oh, yeah, definitely. All right, you guys, thank you so much for your time and attention. It's been a great conversation. I'll look forward to seeing you on the next episode. Take care.